To ensure accountability and transparency, state statute requires local governments to undergo a yearly, rigorous financial audit conducted by an independent CPA firm. To review the 2024 fiscal year, Jackson County brought in Moss Adams to audit its financial performance and present their findings to the Board of Commissioners. For the last several years, Jackson County's audit results have shown nothing but healthy financials and responsible use of the budget, and 2024's results were no different. Here are the highlights from the presentation.
So the first report is over your financial statements and whether that it is materially correct in accordance with the generally accepted accounting principles. So based on all of our test work, we were able to conclude and provide a unmodified or clean opinion. So overall, great results there. The second report there is that Oregon Minimum Audit Standards report. So in Oregon, we do have to issue a separate report over compliance as well as internal controls over financial reporting. We did have one reportable finding in the current year related to the budget process. And as part of the budget process, when you're adopting that, you have to do a publication in the newspaper as well as include the budget information as well as when the budget committee is going to meet online 10 days before that meeting. And so the only piece that was missing there is it wasn't on the website for the full 10 days before that meeting.
You'd mentioned that it wasn't posted to the website 10 days. What was the time frame before?
It was 7 or 8, but I can't remember 100%.
Okay, so
it was close. It wasn't
close.
Like it was very short, but it wasn't quite that 10 days.
I know that the other publications were made properly. And also, we have put a system in place, have a checklist to make sure that it doesn't occur again, that we didn't get it on our own website with enough time.
So this first slide is really just looking at overall county-wide revenues. And you can see that there's been an upward trend in your revenue over the past 4 years. And that comes somewhat from the COVID-19 funding. If you really dive into the details of the current year increase in revenue year over year, it really relates to investment earnings. So investments have been recovering from the downturn that happened a couple years ago. So that little negative amount there that you'll see in other revenue really is related to investment earnings, because otherwise how do you have negative revenue, right? So that's what that is related to there. So as investments have recovered over the past couple years, you're seeing that growth there in your investment income, and that was really the main increase from 2023 to your 2024 fiscal year end. So these are the countywide expenses. These are broken up into probably the major functions within the counties. And what this shows is really a trend of expenses being a little bit flat in the current year for fiscal year 2024. Some of those increases really were related to increased costs due to inflation and personnel costs. So there were a couple other projects in transportation that had some increased costs there. But I would say really looking at the year over year analysis, that it was really attributed to just increased costs over similar services. So this is your net position. This is if you were to take all of your assets and reduced it by all of your liabilities, what's left and what's it made up of. You are seeing an increasing net position, which shows some healthy growth there. And then the next 3 bars really show you where that growth is coming from. The second bar there is your net investment in capital assets. So if you were to take all of your capital assets and reduce it by the liabilities that are related to those assets, you'll get that green bar there. We do like to see that trend upwards a little. That means that you're continuing to invest in infrastructure and buildings. The current year was somewhat related, if not mostly related, to actually projects at the airport. And so those are essentially pieces that you cannot spend. They're not spendable. They are invested in assets. So it's not cash that the county has available to spend on resources. The next bar is your restricted resources. So you can see that actually has maintained relatively flat over the past 5 years. These are all resources that you have to use for a specific purpose, either by law or statute tells you that you have to use them for a specific purpose. The county doesn't have any flexibility in what that funding is used on. And then that last bar there is your unrestricted net position. This is where the county does have some flexibility and where they're spending their funds. And so you've seen a nice uptick in that. I know the county has some planned projects, and so it's nice to see that you're building in some reserves there in order to have these projects in the future. And I would say that these are very good results to present. I would say if you were to compare this to many of the other counties in Oregon, you might not see this same trend. So this is the fund that you have the most discretion to utilize county resources. This is where actually a lot of the COVID-19 money is funding into your general fund. And so that is impacting your revenues as well as fund balance there. But this is also showing some nice growth. This is the other side of your general funds, and you're seeing that has been increasing over time. And this is a statistic that's looked at quite a bit as it relates to your general fund balance, or as a percentage of your expenditures over the year. And I would say that there's a GFOA best practice out there that says to always maintain at least 17% in order to be able to fund your operating cost through when you start receiving property tax funding. And so you can see that you're well exceeded this and have some reserves there to hold you through if you needed to. You can see over the past 5 years that county debt has decreased. You can see that you've been making your payments and not incurring a lot of debt in order to maintain the services that the county provides. What you've been able to do in the county, you build your cash reserves, not take out a lot of debt in order to be able to perform services. You also are working with a direct tax rate that's quite a bit less than your counties in the north. You're still able to really strengthen your financial position with a lot less revenue per $1,000 of value in properties.
I just see our departments, our county, and our administration continue to budget conservatively within the monies that have been trusted to us by taxpayers, and we continue to budget with expected changes, whether those are the ever-changing accounting standards or the financial changes, which are no doubt probably coming our way.
The other thing that we need to always look at and appreciate and make sure people understand is our net position is increasing, and that's despite increasing costs. Some declining revenues in some areas. Our tax revenue is going up in the increment that we expect. But we're also still able to offer the same robust service levels, and that doesn't mean we're able to do everything we want. We have to make tough budget decisions, but it continues us on this great path, and to have the resources available to do the things that we need to do.